Welcome to the SARE Ladies podcast, where our mission is to get more people that look like us participating in the real estate industry.
Whether you're a seasoned real estate pro or just starting out, there's something for everyone here.
I'm Anita Wong.
And I'm Tiffany Lee.
We invite experts to not just talk about real estate, but also about our unique identity as Asian women and the cultural values that shape who we are as investors.
Now let's get on with the show.
Hello, one and all, to the SARE Ladies podcast, where we are dedicated to empowering Asian women in real estate. I'm your host, Anita Wong, and here is with me is my co-host, Tiffany Lee. We are super humbled with our special guest today, Amanda Han. Say hi, Amanda.
Hi, everyone. So excited to be here.
Hello, welcome. So today we're going to be diving into a topic that resonates with many of our listeners, which is tax considerations for Asian families.
That's right. Amanda is a CPA and tax strategist at Keystone CPA and specializes in working with real estate investors to save massive amounts in taxes and keep their hard-earned money. She helps educate investors on how to maximize tax write-offs, legal entity strategies, tax-efficient ways to access profit, how to use 401k for real estate, and much more. She's also the author of the book, Tax Strategies for the Savvy Real Estate Investor, a BiggerPockets book, and has been featured on Forbes Finance Council, Money Magazine, Talks at Google, CNBC's Smart Money, and the BiggerPockets podcast, and now the SARE Ladies podcast.
So now, before we dive into it, I just want to say how important it is, this topic is, because, well, one, as Asian investors, it's a rare topic that we talk about money in accordance to Asian values. And two, I can't underscore enough how important it is to talk about it specifically on this podcast, because I feel as Asians, business and finance are a family affair, with operations typically starting small and relying on the collective effort of family members. So this creates really just unique challenges and opportunities, especially when it comes to taxes. So today we're going to be exploring those intricacies, all the common mistakes made by Asian investors, and of course, these situation may not be a blanket statement for all families, for all situations. So we really encourage you to seek out Amanda, and her contact information is in the podcast notes. So to privately ask her all your specific questions. Anyway, so we're going to just start off with just getting to know Amanda. So why don't we start off a little bit about your family background and what was your experience with money growing up?
Well, thank you, first of all, for having me here. I'm super excited and a little bit nervous. I've been teaching taxes for so many years, but I think this is my first time talking about tax strategies for Asian families specifically. So I'm really excited to dive into it because I think, obviously, I grew up in an Asian household, so I have a lot of interesting stories to share about that. I am actually the third generation of real estate investors and business owners in my family. So my grandparents started out their business in Taiwan. And when they immigrated to the US, they continued their business and then they bought real estate. So my dad and my mom dabbled in real estate and businesses. So I sort of was really fortunate to have grown up in an environment where I heard my grandparents, my uncles, my parents talk a lot about money and investing. But I think maybe surprising or not surprisingly, I think to our Asian friends is that even though I grew up in a very entrepreneurial family, my parents always taught me not to be an entrepreneur. Like they taught me to go to college, get a good degree, get a really stable job. And what job is more stable than being an accountant, right? Especially for women. My mom was like, you should be a woman accountant and then you'll have time to take care of your kids and all that stuff. So that was kind of what prompted me to do accounting, actually, believe it or not.
Do you think that was a good idea, or would you have changed your mind if you felt like you had more agency back then in your decision making?
It's really interesting. I mean, I love my career as an accountant. I think it's very different than what my mom envisioned. So my mom was also an accountant for our family business. Like you said, right? Asian families, we got to work together. So my mom was the accountant for my grandparents' family business. And she did a lot of the financial accounting, like bookkeeping stuff, which is very different ultimately than what I do day to day. Like I don't really do any bookkeeping stuff. A lot of what I do is on the strategy side and tax planning. So I think the end result ended up really good, but I just ultimately took a little different path than what my mom was envisioning in terms of like job stability and, not a lot of overtime, because definitely, being an entrepreneur is not stable, as you guys know, and the tax world is a lot of overtime.
Okay. So I want to dive into our first topic, which is about income shifting. Amanda, many Asian families often start with small family-operated businesses where it's an all hands on deck situation, where I'm talking about child labor in restaurants, kind of, or in the liquor store kind of situation. Could you explain the concept of income shifting that you commonly see for your Asian clients, and what are some tax considerations and conversations we should be having with our families?
Yeah, I mean, it's so funny you bring that up, because when we first immigrated to the US, my grandparents owned a portfolio of condos in Las Vegas, where I grew up. And so we actually lived in the condos, like, alongside our tenants. So growing up, I was like, the landlord's grandkid. And so the neighborhood kids would want to play with me. But I just remember growing up a lot when, we would go and collect rents from the tenants. Sometimes it's quite unpleasant if you have to go and collect rent. When there were turnovers, my cousins and I would be there to help with cleanup and all that stuff. And all the years we were doing that, we never got paid. I have a gripe about that with my family, but we never got paid. But I think it's just like typical for Asian people, like you guys said earlier. We don't really talk too much about money. It's almost like, how dare you ask for money to be doing stuff? This is like what you're supposed to do. But if we change the way we think, if we change the way we think about things and just be more strategic and say, if I am having my kids or grandkids or even my siblings help out in my real estate business, and I pay them a certain amount of money, that money that we pay becomes a tax deduction to us as rental expenses. And for the person who receives the money, if it's, kids or grandkids, they are likely in low or zero tax rates. And so the end result is that as a business owner in the business of real estate, we get a tax write-off for it, and it's tax-free to the recipient. I really love that, because it also helps to teach the kids, the value of working in a real world sense, and not, growing up, you guys probably relate, when we have to do stuff for the family, it's like chores. Like, we hated it. We want to hang out with our friends, but no, we have to, be at the liquor store or cleaning out their tenants.
Amanda, do you have children yourself now?
I do. So my husband Matt and I, we have a 5-year-old and we have a 12-year-old.
Oh, I was going to ask, do you have your 12-year-old do your bookkeeping for you, and then you you pay her?
So yeah, we have 2 boys, and my older one started working for us, I think, when he was about 10, almost 11 years old is when he first started working for us. Not necessarily bookkeeping, but he helps us a lot around the office. So, like, I've set up my podcast room. I'm always rearranging my podcast room, by the way, just so you guys know. And so he's always here helping me build furniture and things like that. And he loves it, because we get to spend time together, and he gets to earn some money. And, it's a tax write-off for me, right? Because I would otherwise be paying somebody else to help build furniture. Why not have my son do it? Now, granted, what he does with that money is to, buy video games, which is not ideal. Trying to convince him to save and invest some of that money.
I mean, he can always resell the video games.
Yeah.
Creative. He's an entrepreneur in that way. You just guys, mom and dad doesn't see the angles.
Yeah. So I'll share a story with you guys. I'm always taking the opportunity to teach my kids about how to make money, right? I mean, I talk to clients like that too. So I sort of just take opportunities to talk to my kids about passive income, and, rental real estate, how you don't have to do anything, it makes money. And so one day my son told me, like, oh, hey, I'm starting a business with vending machines with my friend who's my partner, and we're going to make so much money doing it. And I was like, well, tell me more about it. And he said, yeah, I already started it. I'm building it in Roblox. And so something about when you do that kind of stuff, then, people will come and pay and you make fake money. So I was like, well, I'm sort of proud that you've got the theory, but we're talking real money, not video game money.
Bit by bit, it's the little stepping stones. So, but that is great. That's like straight out of the Robert Kiyosaki. Like, it was like, instead of like, it was like vending machine with like, what, their books or whatever or something. You remember it anyway. Okay,
Does
so
your son?
on
Oh,
to
sorry. Okay, go ahead. I had more follow-up questions about her son, and if he has like a little Twitch stream for his video games and takes after mom and kind of has his own podcast, because then he can write off the video games, right? If the Twitch stream is,
Oh my
oh,
gosh, that was so good. That was so good. Yes, I'm encouraging him to try stuff. I think at 12, he's kind of like all over the place. Of course, most kids nowadays, they want to be a YouTuber and all that. So,
yeah.
yeah, I'm really trying to encourage it. I don't know that it will actually come out of anything, but it's always fun
Yeah.
when you're able to do that. And, we talk about income shifting for kids all the time, but I know not everybody has kids already. We also have clients who do income shifting just to other family members. Like, you have a younger brother who's still in college, who's, living off of you sort of. And so that might be someone good to shift income to and have him help out. I mean, I say he could be a girl, of course.
but probably he. Got it. Okay, awesome. Well, yeah, I mean, we're gonna talk about communal wealth. I know we touched upon it a little bit. So obviously, a looming concept about money is that it's commonly within Asian households is a concept of the communal wealth where Asian families invest as a family unit. Can you give us some things that we should know from a tax perspective about the advantages or disadvantages with investing with family, besides the personal stuff? But what are some common mistakes or misconceptions?
Yeah, I mean, when we co-invest with other people, whether it's family or just other partners, there's always complexities involved because not everybody has the same appetite for risk. And not everybody has the same appetite for debt, right? Or what is our exit strategy long term for the property? So it's not a terrible idea to invest with family members, but I think you have to treat that transaction like an unrelated party and really have those tough conversations up front. And we know Asian people are notorious for not having those conversations. We just kind of do it and think about it later. And this is where I see problems arise all the time in working with clients. Because I think when parents buy properties with their kids, everything seems fine, right? You're my kid, everything will go to you when I die. But what happens is your kids will get married, and you may or may not like their spouse. And you have other kids, and siblings. Do they get along? Do they not get along? So those are a lot of things to really take the time to talk through, as difficult and uncomfortable as it is for Asian families, to really do that. I think if things all else equal, I typically recommend for family members not to invest together as co-owners. So a typical scenario could be like, hey, you guys want to start investing real estate, you don't have money, but parents have money. Instead of co-investing with parents, it's a lot cleaner if parents will lend money to the kids. If they are lenders, then you're paying them back, right? Hopefully you're paying them back, principal, interest, and then they're out of the deal. And you are 100% owner of the property. So in the future, you have 100% choice in what you want to do. Do you want to sell? Do you want to keep it? Are you adding your spouse on it? So it becomes a personal decision, and there's a lot more flexibility. And of course, as the sole owner of the property, you get 100% of the tax benefits rather than having to share it with your parents who may or may not even benefit from it.
And I think that segues excellently into our next question, which is compensating family members. So we've already talked about the kids, but now let's talk about the older folks, as we all will have aging parents. Family support and care for elders is a common concern for Asian families. What guidance can you offer regarding how to do this in a tax efficient manner? Because you just mentioned there might not be any tax benefits for the parents to be owners. So what are the do's and don'ts when it comes to paying family members to ensure compliance and maximize tax benefits?
I think paying parents is the same concept as paying kids, right? So the scenario I see a lot is our parents are retired or semi-retired, or maybe they're just making a lot lower income than we are. And so we look at what is their tax situation, what tax rate are they in? And so if I'm just giving money to mom and dad every month to help them out, that's not really a tax deduction. It's just a personal choice I'm making. But if my parents can help out in my real estate in some capacity, then I can pay them just like I can pay anybody else a reasonable compensation. It could be a W-2, it could be a 1099. And so the money I pay them now becomes a tax deduction. And then mom and dad can use that to, go eat Chinese food or whatever is that, or that they have a luxurious life of this extra money you're giving them. So it's the exact same way as it works with kids. And we do see a lot of this with parents as well. We have clients who use both. We call them the sandwich generation, right? Because they have young kids they're supporting, and then they have elder, aging parents they're supporting. So it makes sense to consider that both ways. One thing to be careful of though is, there are people whose parents are in higher tax brackets. So if your parents are in higher tax brackets, this strategy may not make as much sense in that scenario, right? So we're looking at the tax rate of, if you're at a 30% tax bracket and your parents are at 15, so if by paying them, you're saving 15% taxes across the board as a family.
So it's like almost the inverse. If your parents are in a higher tax bracket, they should be claiming you as their employees.
They should pay you. Yeah.
It's
a good selling point.
Be creative. I love that's like tax strategy is so creative. So if you were to employ your parents, what kind of jobs would you give them? Like babysitter of the kids, or what? I feel like that's a common thing for like grandpa. Yeah.
Yeah, that's a great question. So when we talk about income shifting, one thing to understand is income shifting only works if the service that's being provided is related to your business. So whatever you're in the business of real estate, you're doing consulting. So it has to be business related. And unfortunately, childcare itself is not a business deduction, even though it's like, oh, I'm paying someone to watch my kids so I can work. That unfortunately is not a write-off. So, but your parents, it's unlimited what they can do for you, like with respect to your real estate, right? Because they're very capable. So they can analyze deals, they can do your bookkeeping, they can help you with turnovers. There's all sorts of stuff that they can do. But just be aware that whenever we talk about income shifting, it is only when they're doing something that you would otherwise hire out for your business, for business purposes.
How do you prove that they're doing it? Does the IRS have to ever go after you to be like, hey, prove your parents are working for you? Because I feel like my parents aren't going to do anything if I ask them to. They're like, we're retired, Tiffany.
You know what? I think I would challenge that. I think at least for me, my parents do all sorts of stuff. It's the same thing. It doesn't really come to mind for me to pay them, right? But if you're like, hey, I need help with this, they're usually super cool about just rolling up their sleeves and doing it. So I think even for me, it's a good reminder to be, make sure we are aware that when they're doing stuff for us, can it legitimately be a business expense, or how can we structure it so that it is a legitimate business expense, right? So then we can pay them and be able to take a tax benefit for it. In terms of how do you prove what they're doing, I've not really seen IRS come and look for like a time log of what's being done. But what I always tell people, documentation wise, whether you're paying your kids or your brother or your parents, you want the same documentation that you would have if you were to hire somebody else. So building furniture, for example, I have paid people to come do it for our office. Usually we get them online, and there's some sort of form that I filled out, know when they're coming. I've told them what's being built. So similar types of documentation with respect to hiring family members.
Great. All right. That segues to our wealth transfer question. I don't know how to make a good segue to it, but we're going to do it. Generational wealth transfer and succession planning. So passing wealth in businesses to the next or second generation is a significant aspect of Asian family legacy, which we did touch on earlier, like 2 questions ago. Could you share some best practices for generational wealth transfer among Asian families, including how to prepare the next generation for this responsibility?
I think Asian people, or at least I don't want to generalize Asian people. I've just seen from my experience, we're really bad at talking about death and money, right? Death and money, we don't ever talk about it. Like my grandma was on her deathbed, and it's like nobody dare talk about the fact that she's, going to pass soon. And I think if we really want to do true planning, we have to overcome that limiting belief and be able to openly talk about it. Especially like if you are the parent, if your parents own a lot of real estate, have a lot of assets, you really need to know what's going on before they pass, right? So you're not scrambling, trying to figure out where things are. What I see happen a lot is as parents age, especially Asian parents, they tend to get to a point where they just start randomly adding kids on title to their assets. And I see this all the time, again, even with my own family, where it's like, okay, well, I'm older and maybe one day I'll have a stroke. And let me just make sure I add Abby over here to my title. And Abby doesn't even know about it, right? So Abby has no idea. And then, one day parents decide like, I'm going to sell this property. Well, guess what? Abby's been on title for 5 years that she didn't know. Now there's taxes that Abby has to deal with. So we have to be very transparent about, hey, if you're adding someone to title, taking them off title, please let your kids know, let your family members know, and plan accordingly beforehand, because just that act of adding a child to title could be very detrimental. Not only is it because if you sell, they might have to pay a lot of taxes that they weren't aware of, but also we lose out on this really huge benefit of losing step-up tax bases. If a parent or anyone were to die with real estate in their name or in their trust, their beneficiaries actually get to receive or inherit that property at the fair market value. So if dad bought a house for 100,000 and when by the time he passed away it's worth $1 million, I would much rather inherit that property, because now I get it at $1 million of cost basis. And if I were to ever sell it, the first $1 million would be tax free to me. But if dad were to add my name sometime unbeknownst to me, then when that property is sold, I'm going to have to pay a good amount of tax on that.
That is very smart.
Yeah, that resonates with me and my family a lot too. And there's a lot of always scrambling. Oh my goodness, I swear, every time I'm not sure. Like, well, my parents watch like the Chinese news all the time, and I swear, like every time there's like a new news that all the Asian family sweeps are all the same. They're like,
it's like all Asian fake news.
Yeah.
On the WhatsApp stream, like everyone does the same wrong information.
Yeah, and then they start calling their lawyers. They're like, I heard that, I heard from so and so that this is how you're supposed to pass wealth on to your kids, and then, and then it's just like a mad scramble, and and like just as Amanda was saying, there's like we have no idea whether we're on title or not on title, or and then all of those like the tax messiness, and a lot of times I feel like Asian families are just trying to fly under the radar so much that they like start utilizing their kids' names freely to try to hide money from the IRS, not hide money, but try to save money. And it's so hard to keep up. It's insane. My parents do this too, and my husband and I still talk about it. I mean, it's like my like dad math. It's like to me it's like dad math. He's just like, this is how I did it back in like 10 years ago, and it's so hard to catch those, like what he did like that 5 or 10 years ago, and it's all like written on like notebook paper somewhere hidden in the bottom of a drawer. So yes, talk to your families about these early, because
I guess that's the plus side of being a CPA. You can audit your own family for like the past 10 years and see what they were doing.
You would think, right? But I think like what Anita was saying, like when my grandma passed away, so now I'm sort of taking over a lot of the family stuff, and it was, pretty complex. They have businesses, they have land, they have real estate. And just the other day, my aunt was like, oh, so there's this other bank account. Like what bank account? How come I didn't know this account existed, for this entity or, for this property? So yeah, I think we can all do a better job. But I do think, just to take the viewpoint of the parents, right? I think the reason they add kids and stuff is because they're afraid, right? They don't really know, like they don't know how to do it right, but it's just kind of like, well, something's gonna happen to me. I want to make sure you're in control, and you can sign paper and all that. Again, there's always that fear of like, we're gonna have a stroke, so we can't sign paperwork. But it's really important to understand that we don't have to add our kids. Oh, my headset fell. We don't have to put our kids on title in order to transact for us, right? We could just have them have a power of attorney. They can be a trustee. There's all these different ways that the kids can really help out, if something bad were to happen, without just this very drastic move of add everybody to title.
So what is your suggested approach for like the sandwich generation to communicate this in a very caring and loving manner to their aging parents? Have you seen I almost feel like you have to play like Asian therapist a little bit and understand the family dynamics. It's very complicated and layered with the cultural, like cultural overlay, family overlay, how you have to respect your elders and they know best. And this is like a westernized concept that, I almost feel like them adding their kids to title for them seems like a symbolic gesture,
Yes.
but they don't realize that there's some Western math going behind the scenes with taxes that will impact this. So how do you
there's
have
actually
that
law.
Yeah, exactly. What are laws? Is the Chinese, the Asian laws? What are permits? What?
Yeah, well, and that's the thing too. When people just talking about adding to title, right? I mean, technically speaking, when you add someone to the title, you've given them a gift, right? Because there's no money, you didn't put any in there. Now you own something, there's a gift, and there's gift tax returns that are supposed to be filed. And of course, 0% of Asian people I know ever files a gift tax return. There's kind of like that somehow, doesn't apply to Asian people.
Yeah, they don't
So,
I bet they don't even know that form exists.
no, yeah, it's like you're crazy. But I love it that you brought the whole thing of like respecting elders, because it's such a delicate thing to maneuver, especially like for me, one of my uncles is a CPA too, right? So, and he's from that old school, like, why file a gift tax return, and so it's difficult to have that conversation, like, well, this is the law, and this is probably what we should do. Very difficult for me. I don't know like a really amazing way to have that conversation as a sandwich generation. What I found to be somewhat helpful, just in my experience, is I just share stories with like my mom. I share stories all the time, and I'm like, hey, this one client, their mom did this. It was so crazy. Now they're going to owe a bunch of taxes. But I kind of have to say it several times for her to finally be like, okay, should we look at my stuff? I think you're on my, like, that literally happens to me. Like, I am on title to one of my mom's properties. And I was like, can you remove me? Because I don't need to be there. But that conversation, I mean, it took a couple different, example sharings for her to actually do it. Because I think, like you were saying, Tiffany, for them, it was symbolic. It was like, hey, I have a house and I want you to own it with me. So it's, takes some time to kind of shift their mind frame.
I think you said something so interesting, and like I almost feel like you said it out loud, but I realized that you kind of have to scare your parents a little bit, like psychologically, just like
on those
insert that
WeChat
fear.
threads, you create your own.
Exactly. You have to kind of create that narrative, the story. You tell them a horror story, and then that gets them. Like, and I almost feel like that was their approach to raising us, and that's why so much of us have like anxiety now. And we were like, oh yeah, it's because our Asian parents told us all these horror stories, and it's like you kind of have to return that same energy as they're aging. To get the
I love it. You just gave me an idea. I think the three of us should create a YouTube video. It's going to go viral, and we're going to just share this piece of it, but we're going to do I'm going to have like real client stories of my own cousin. Like, I'm just going to like one of my best friends. Let's just do that.
Yeah. Oh my gosh. Like fake case studies. Like they don't even have to be real people. It's just like a cautionary tale. It's a cautionary tale.
I have to have my dad on here just to explain himself. Just be like, can you explain?
He's like on the hot.
Yeah, and we'll unfold it all in live, like real time on the internet.
We'll be like one of those radio shows that do prank calls. Like we'll just call up our Asian parents and be like, "Hey, we're the IRS, and we have a few questions for what's going on." And just scare them, and then afterwards they call you directly and just be like, "What's happening?" Oh my god, that'd be so mean. That's such a good April Fool's episode. It's right around the corner.
I love it. Let's do it.
Yeah, we'll have you back on the show for April Fool's, Amanda, just to do that mean prank. So that actually segues to the next thing. So to avoid this situation, right, for your kids, teaching your kids about tax literacy and financial literacy in a Western context. On the same line as family legacy, can you tell us about your take on teaching kids about finance early and what you do to teach them these concepts?
Yeah, I think for me, because I was really fortunate where I grew up in a family of entrepreneurs, it was, I don't know, just the concept of like how to make money doing various things, like I was drawing when I was a girl, like little girl, I'd be like, I want to sell this. And I don't know if everybody thinks that way, or if it's just kind of my upbringing, but I try to just have pick little opportunities like that when my kids do stuff. Like my younger one was he and I started to paint rocks. Like we just went on a walk, we got some rocks. I'm like, okay, let's paint it. And he painted some Ninja Turtle, and he was telling me one of the kids at school like this. I'm like, oh well, let's paint a couple more and we'll give it to your friends. And if everybody likes it, we'll start selling it. So I think just little opportunities like that to get them into the mind frame of being entrepreneurial. That I think has been really helpful. Again, my story I shared earlier with the video game vending machine is such a small thing, but I think is really helpful for them to start thinking about it. And I talk to my kids about taxes too. They don't really understand like the entire concept of taxes, but they do understand that part of the money has to go to the government. So every dollar you make is not yours to keep. And I keep threatening them that I'm going to have a kitty tax. So when they're bad, I'm going to tax them on whatever money that is that they're earning.
You should tax them and be like, this is for your room and board.
Yeah, this is rent.
This is rent.
Right, like this is not free, guys. What's so hilarious is what for my older son, I think a couple of years ago, I was telling him the concept of taxes, because he didn't understand, like, well, who has this money? Like, who's taking your money? What are they doing with it? So I said, well, the government has the money and then they use it and blah, blah, blah. So I was trying to explain to him why people hire me. Like, what is my role? Like, why is mom, what in the world is she doing? And so my purpose was to say, hey, it's really cool what I do. I help people save taxes so there's less of the government. Is that something you want to do when you grow up? And he said, no, I want to be the government when I grow up. That's what
Hell yeah.
I think he might start like a casino, an underground casino gambling ring. That's what that sounds like to me.
Either he's gonna be in politics and be like, no taxes, or like like the Tea Party, like, or the total opposite. That's funny. I love that. So I want to hear, besides that, is there any way that you gamify, or what are the lessons that you teach? So your kids are, pretty young. So what are those like big concepts that you teach them like at this age?
I love that, gamifying it for the video game. Obsessed 12-year-old.
Yeah, gamify. Gosh, I really haven't found a successful way to do it. But one of my friends, who's also a client and a real estate investor, something that she started doing with her kids, which I'm going to start doing at the end of this year, is every year at the end of the year, they actually have a big family meeting just with her immediate family, and it's like a pretty extensive numbers and PowerPoints and all that. But I think the way she sort of gamifies it, she says, she'll show up like a property, like, here's my apartment building, and this property made this amount of money, and that money paid for. And she'll show her kids like what they used the money on that year. Like, oh, remember when we went on this vacation, or when we bought this, or we took ballet lessons, like this house right here paid for that. And so I think that was really powerful. And I always thought, like, I want to talk to my kids about money in that format, but I'm like, that's super boring. How would they sit through it? And I think she had a really great way of relating that to, like, that's what this house does for us. That's what this house does for us. So they can kind of see the whole concept of passive income funding different parts of your lifestyle.
Yeah, we had Rick Hu on here from Minus Wealth earlier. We were talking about this sort of concept of like sort of creating relationships between where money comes from and what it does really mean. For his example, he was actually connecting like time to money. His kids are, I think, younger than yours, but it's sort of like, okay, well, if we want to go to a trip to Disneyland, well, dad has to work for, this amount of time. So do you want to go to Disneyland, or do you want me to spend more time with you? Luckily, he said, thank goodness. He said, I want to spend more time with dad, so we don't need to go. So, but I love that there's like,
I feel like that story was fabricated, Anita. He's just saying
it's too good to be true. My kids would probably say the opposite.
I think his kids probably threw him under the bus, but he wanted a good story to tell.
Yeah. Not calling you out, Rick, but we're calling out your BS here, because our kids would probably never say that. But no, regardless, I think the relationship is what it is, right? It's like time equals money, or maybe like this is where the money comes from, so that we can take back time. So I think I love that. it is maybe just about creating relationships between these concepts.
Oh my gosh, imagine you started charging your 12-year-old for screen time when he wanted to play video. It's like you're running an arcade now. You're the house.
I think that's fair.
That's like literally gamifying. That's like it's not even that much of a stretch. It's like, hey, when I was your age, we didn't have video games at home. We had to go to the arcade and put quarters in to play Pac-Man. And that was it. And arcades do charge by time, which is, oh my God, that's so funny. I was on his side in the beginning of the podcast, and I become the villain.
Well, you could also, can also flip it, right? They can also buy the video game, but then you basically, it's on loan, so their friends have to pay him in order to rent it out or to come over to your house.
Oh yeah, I like that. He's and then after enough rentals, those video games kind of pay for themselves and plus more. Yeah. And that's actually great because what if their parents wouldn't shell out the $30, but you're like, hey, I can let you borrow it for $5 a day. Yeah.
That is what Robert Kiyosaki did, right? It was a comic books instead of video games at the time, right? It was just his friends would come over, read it, and they pay him a little bit of money, and then leave, and then they would pay for the comic book collection.
That's the worst. I would never go to my friend's house if that was the case.
How do not have friends? Really friends.
Yeah, we're not really. How do not have friends?
Actually, when you go, you have to pay Tiffany to do anything at her house.
It's the worst.
Imagine the parents' conversations.
It was a really great conversation though, because it was hard for me to explain to my 8-year-old at the time why it makes sense to invest in real estate, the concept of rental income. But I did use an example with video games to say, hey, what if we invested in a couple of video games? People can come, and when they play, they pay you. It's one-time investment in a video game console, but you can make money from it over and over again. So he really liked that. But I'm not trying to encourage more video games. So that was just a conversation that ended.
You say that now until you have kids that are not your kids in your house at 6 a.m. in the morning playing video games all day. Well, this backfired in my face.
Right.
I did, work with this. I mean, I had this family that I was a family friend connected to, and he was actually very wealthy. And he was whatever my kids are into, we try to put an entrepreneurship angle. And now their kids are much older now. They have kids of their own, but his first kid was into cell phones, just playing on cell phones. So he gave him money to start his own cell phone business. The other one was a teacher, and then he gave him money to open a daycare, and and then now they just have bloomed their businesses just based on those things that they were originally interested in. Because no guarantee that your kid, it would be nice, but there was no guarantee that your kids would be interested in real estate, right? That is luck, by chance and by luck that they would be into the same kind of investment vehicles that you're into, but there's always no guarantee. So, sometimes you just kind of have to pick up with what they're interested in, and then combine and try to put that entrepreneurial spin, and always commit to maybe whatever you want to do, you're going to start a business in your lane, and this is yours, so I love that concept that they had.
Well, and I think, most Asian family, we're always really big on school, right? So the hope is always still you go to a good university, get good grades, get a good job. So that's still just the same. That doesn't change from generation to generation. And a question I get from clients all the time is well, how should I save for a college education? And so, traditionally, I think most people will do a 529 plan, education savings plan, and those are really great. But because most of our clients are real estate investors, the downside is those plans have to be just in the stock market. So stocks, bonds, and mutual funds. And another possible way to save for education or college stuff for kids is to just do it through rental real estate, right? So if we can buy a rental property and we just say, hey, this one is going to be for little Johnny, I'm going to keep all the cash flow in here, I'm going to build up equity, I'm not going to tap into it because that's sort of, my college fund for him, then it's really flexible, right? In the years that you own the properties, you're going to get cash flow, you'll get the tax benefits of depreciation and all that stuff. But when the time comes, you can always, tap into the equity, by taking a refi, or you can use that cash flow to then pay for little Johnny's college. And, if little Johnny's not going to college, like you said, because that's just not what he wanted to do, he's like the next YouTube star, then you can just use that money to help fund his business. We're not tied down to college or university or whatnot, just to how to spend that money too.
That's excellent.
Love that.
Sit with it for a little bit. Let it marinate. But I think, Anita, we're getting to the fun part of the episode, and that is our rapid fire question segment.
Yes.
How did you do that?
I know.
She loves that feature.
The magic of podcast production. Took us 3 years to get here.
It truly did. Okay, so we're going to ask some rapid fire questions, Amanda, whatever comes off the top of your mind. So first question. What is the thing a mentor or family member taught you that resonates with you today?
So one thing that a family member taught me that resonates with me, my grandma. So my grandma, she was born in China, went to Taiwan, came to the US, never knew how to read or write, but she built several different businesses. And one of the things that she taught me was that you don't have to have you don't need to know everything to be successful at what you do. You just need to do it. And once you do it, you'll be able to learn what all the skills are that's needed. So that's really resonated with me. It allows me to pull the trigger faster when I start doing things, like with real estate investing too, just kind of like, well, I don't really know everything I need, about it, but I can start. And then I think the other stuff I'll just learn on the way.
I love that. Okay. Name someone that is doing something awesome that everyone should know.
Oh man, so many people. So something currently, so one of my clients is Brandon Turner. I don't know if you guys know him. He was part of BiggerPockets, and he started a new company just a year ago called the Better Life Tribe. And the whole community, the company is about empowering people to build wealth through real estate investing. And what's really amazing about this business is that 100% of the proceeds are donated to charities every year. And he literally doesn't even take a salary, although I keep telling him he must take a salary. That's like tax law. But nonetheless, I thought it was really amazing for someone to just start a company purely, not just to help out real estate investors, but purely for nonprofit donation purposes.
Is there a tax benefit to that? Because I'm sure he's making so much money on his real estate investments that having that charity in place kind of helps offset that. So is it all really good? Is it all very altruistic at the end of the day? So one of the buzz, but there's a tax efficiency strategy going on behind the scenes here. So Amanda, can you please weigh in on that?
Yeah, for sure. So, obviously there's a lot of people, a lot of wealthy people use charities and nonprofits as a way to save on taxes too, right? It's what we call doing well by doing good. So for sure, we work with clients on that all the time. But I don't want to share too much about a person's specific tax situation, but like you guys know, real estate investors, we get a lot of great benefits naturally already. So if you imagine someone who owns 10, 20, $30 million of real estate, you probably don't really need charitable donations to take any added tax benefits. But certainly there could be tax, benefits for people to do that.
That was a nice try to dig into. That was a nice try to dig into Brandon Turner's taxes. But
the worst. This is how I guarantee we never get on the BiggerPockets podcast because Tiffany's a jerk.
Okay. Third question. Name a book that significantly changed your career.
A book, a book that significantly changed my career. Gosh, there's so many. I love reading books. I try to read as many books as I can. So, I think, excuse me, a book that really changed my career. This is such a stupid one for me to say. I guess one that changed my career is the one that I wrote.
I was just going to say that.
Let's plug the book again, Amanda. Plug the book.
So, okay. So obviously that's just So my book, my husband and I wrote together, Tax Strategies for the Savvy Real Estate Investor. It really changed our career and our business because that was a way for us to really reach a broad audience. Because you can get it from, Amazon, BiggerPockets, Barnes and Nobles, any bookstore. And so we were able to reach a lot of people that we never would, just kind of working one-on-one. And then it got us more involved into being on podcasts like this, right? People read our book and they're like, I want you to talk about it. So that was really transformational. I think we were able to impact a lot more people. But something that really helps me, like one of my favorite books is The Miracle Morning. I love that book because I'm actually a morning person. And especially because, I run a business, I have my real estate, I have 2 kids. I literally cannot get anything done that I want to. And Miracle Morning really taught me how the early mornings when the whole house is sound asleep is like my golden time when I can get what I want done, whether it's for myself or for, real estate or business. It's sort of like my time. And I think that was really transformational.
I know this is our rapid fire segment, Anita, but I want Amanda to expand on that answer. When you said that the book that you wrote was the most transformational for you, how long did that take you to write? Because I know Anita and I at some point would have it on our bucket list to write a book. So hearing it from someone who's actually done it, I'm sure that, there's a lot of research that goes into it, but I'm sure you had your own spin and take on it that makes your book different from all the rest. And, just planting this idea in there, Amanda, I mean, what do you think about writing a book with Anita and I about Asian tax planning? What's going on?
Of course. Asians and finances. Obviously it'll sound much better than Asians and finances, but I think that's like such an amazing idea, right? Because for me, we wrote our book because my husband and I were actually on a cruise, which is so sad. We were on a cruise and I brought a bunch of tax books with me. That's what tax people do, guys. So I was reading these books by other CPAs, which is so boring. And I just thought, it's boring for me as a CPA. How can I expect an investor to read it? And so that's when we said, let's just write a book of our own. And it's really not about tax codes, calculations. It's just about client stories. Like this client did this and this is how they saved. This client did this and this is why they did it wrong. And I think that was, for us was kind of like, this is different because nobody else was writing a book from that perspective, really designed for the investor, not designed for a CPA, just for the investor. And it was actually not very difficult because we work with clients all the time. So it's more of like the fun of picking and choosing what stories were best to share. And I think you guys having this podcast, you must have hundreds of amazing stories. So, I feel like the content is already there. You could probably finish writing it in 6 months.
I feel like we already hit our book topic within this hour of what your next book is going to be. Our co-written, it just writes itself. We just copy and paste everything we just said in the transcript and expand on that of different generations of, I love that, Anita. Yeah, write that book with Amanda. And Amanda, you can get us on BiggerPockets too, so we can ride on your coattails.
Oh, for sure. Yeah, you guys have to go. I don't know why you've not been on BiggerPockets. You need to be.
Oh, thank you. That's so sweet. I don't know if we can after what I said about Brandon Turner, though. Sorry, maybe I'll edit that out in post. Anita, did you freeze? I think Anita froze because I'm like,
oh. But she froze in such a beautiful pose.
I know.
When I freeze, I look like super crazy.
That is a beautiful. I do have to say, I might have to edit this out, but this is kind of funny. I thought she was not laughing at my joke, and I got a little scared. She looks kind of stern, but it's very pretty.
Yeah, me too. I was like, I don't think she wants me to co-write a book with you guys.
Oh, there she goes. All right, well, let's wait for her to come back in. But that's such a. I kind of want to keep that in the recording now. Our little bloopers.
Isn't that so funny how she froze in this perfect angle smile? Mine would be double chin.
I'd probably be mid sneeze if I froze. All right, let's see. Let me text her and see what's up. Do you have a hard stop at 12?
Let me see. Maybe she had to go to
maybe she went into labor.
Yeah, she's bye.
She's totally in labor. All right. So if you have a hard stop, I guess I can wrap up the episode. All right. So you know what? We did the book that significantly changed your career. That is your own book. I love that answer. That's the best answer, actually. Okay, the last, since you're such a fan of the button, the last rapid fire question for you is, what is one habit you have in your daily routine that fundamentally changed who you are as a business person?
Oh man, a daily habit. So, um, something that we started doing about maybe 6, 7 months ago that has really changed, not just for me as a business person, but just in general, is that my husband and I go on a morning walk every day. It's only about 20 minutes or so, just right outside our house. And that has been really transformational because it's a time for us to connect with each other. And it's also a time for us to kind of plot out the day and talk about, what's going on, whether it's real estate, investing, business, or the kids. So I think just taking the time out, and again, it's only like 15, 20 minutes of time, but it gets us moving, right? It's like get my steps in. And it also allows us to be able to just, talk about what are all the things that's happening. And I think that, to be successful in business, you really first and foremost have to have a good family dynamic. And it starts with the parents, right? So typically it's like, if we're fighting, then the kids are kind of off and work is off and everything is off. So I think that's just like a small habit we've done that's been pretty transformational. Oh, sorry, I think I can't hear you. Maybe something's wrong with my headset.
Oh, wait,
Can
no,
you hear us?
I'm muted. Yeah. Welcome
Oh,
back,
okay.
Anita. Yeah, I muted so that you didn't hear like me breathing into the mic. But welcome back, Anita. We kind of kept the show going. We weren't sure if you were joining us again.
Sorry,
We
we lost
actually thought
power.
you went into labor, Anita. So we were a
Yeah.
little worried about you.
We're like, all right.
No, I lost Wi-Fi or power or something like that. It's been a little glitchy in the Bay Area lately. So, yes, apologies. I am back. Not in labor.
Awesome.
Not in
But-
labor. But we hit the last rapid fire question because I wasn't
Great.
sure if you were coming back. But I was going to say, if Anita didn't return and she was on her way to the hospital, that I'm sure we can speak for the both of us that we're so happy, Amanda, to have you on the podcast. And we'd love to have you back and expand on like all those great gems that we came up with, like that we discovered along the way, like how you and your husband discovered that on a cruise. I feel like, we could be work wives together and do that. Oh, Anita and I joke that we're work wives together. I mean, maybe we can be a throuple with Amanda. I kind of am into it.
Yeah.
Maybe Anita.
Yeah,
Okay.
for sure. Sister wives.
Amanda, I just love your sense of humor, how you just get on board with the chaos that is this show.
Yes.
So if you guys want to get in touch with Amanda, for our listeners, what's the best way to reach you? And again, we'll plug a direct link to your book too, on the podcast notes. But
My
yeah,
transformational book.
yeah. The secret.
Yes. The best place to find me, so is my website. So our firm name is called Keystone CPA. So you go to our website. We have a free downloadable tax savings toolkit. So it has a lot of great information, more in depth about like how to pay your kids. Do I need to have an LLC? Some of the common questions we get all the time, and you'll get access to that through our toolkit. If you're looking for daily tax tips, the best place to find me is probably on Instagram as Amanda Han CPA. And we also have a YouTube channel for, just additional silly stuff like this.
We are
So
the
quick-
silliest bios. We should call this silly ladies and not Sarah ladies. Sarah
Silly Sarah ladies.
Yeah, silly Sarah ladies.
Quickly, Amanda, will you be at SARECon this year?
Oh, yes, I will be. I'm actually speaking. I don't.
Yes.
Annie hasn't told me when yet. I don't know what
What?
day, but I will be there. And I think you guys have like pre-party stuff right before the event, so that's also on my
Yes.
calendar.
Will
I
you
know
be
it.
signing copies of your book at SARECon, Amanda?
Oh, I could. Yeah, no one has
See?
asked me, but sure,
Yes.
sure.
Well, we're asking you now because we have our
Okay.
Women's Summit that is going to be the 2 days before SARECon, which is kind of a new tradition that we're starting since last year. But we would love to have you. Obviously, people would love to have definitely read your book. But just sort of, I want to everyone. I mean, no, we haven't really talked about SARECon yet on this show, but it is in July, and there are some amazing guests, including Amanda, and we will also be having a main stage slot as well. So please come. We're excited, and it's always a rowdy time. It's always like you have to decompress afterwards, 100%. But
Oh my
you learn
God.
so much, you network so much, and it's always such a great time.
And don't miss your flight going back to New York, because that's what
He's
happened
done.
to me last SARECon. I got stuck at LAX airport for like 12 hours because they don't let people out.
This
And I
is
had to
because
sleep there.
Tiffany was gambling the night after SARECon. So let's not blame the airport or whatever here.
or blame SARECon.
Tiffany was
This
at
is
the
a Tiffany issue.
casino. Tiffany was at the
Oh my
casino. Let's be real now.
All right.
I
Well,
see.
let's wrap this
Yeah.
up, Anita. Let's wrap this
Well, we're
up.
Thanks,
maybe the
y'all.
next SARECon should be in Vegas. Then you'll have plenty of time to gamble.
I don't know if I'm
right.
going to make it to our panel, but thank you. Thanks, Amanda, for joining us. It was so fun talking to you, and we're so excited to see you at SARECon this year.
Yes, thanks for having me. If you need a stand-in, Anita, while you're baby bonding, call
Oh my
me
gosh,
up.
Amanda, do you want to be our guest host while Anita is in labor on her maternity leave from
It was gonna be
Susan?
Nelson, so I would
No,
rather
I
have
like you like
on
Amanda so
100%.
much more. I know, we're not
Yeah.
bringing Nelson back. Anita gave me so many ground rules if Nelson was co-host that I was like, I don't think I even want to do this anymore. There's so many rules, but I feel like Amanda will be a perfect counterpart to play off the crazy. All right, Anita, if you're down with that idea, and Amanda, you have the bandwidth for it. I'd love to do that with you.
Yeah, let's chat about that when Anita's,
Yeah. All right. Fabulous. All right,
Thank you.
thanks. Have a good one.
Thank you.
The following is an important legal disclosure regarding the content of the SARE Ladies podcast. Entertainment purposes only. The content provided in all episodes of the SARE Ladies podcast, including discussions, opinions, interviews, and any other type of content, is intended solely for entertainment purposes. It should not be considered professional, financial, legal, or any other type of advice. No professional advice. The host, guests, and producers of the SARE Ladies podcast are not professional advisors. The content provided should not be relied upon for making any personal, financial, or business decisions. We strongly encourage our listeners to seek advice from qualified professionals before making any decisions based on the content of this podcast. No liability. The creators, hosts, and producers of the SARE Ladies podcast shall not be liable for any errors or omissions in the content provided, nor for any actions taken by any listener based on the information provided in the podcast. Any reliance you place on such information is therefore strictly at your own risk. No endorsement of investments. While we may discuss a range of topics, including investments and financial strategies, such discussions are for illustrative and entertainment purposes only. The SARE Ladies podcast does not endorse or recommend any specific investments or financial products. Consult professionals. We strongly advise our listeners to consult with a qualified professional for advice tailored to their personal circumstances before making any investment or financial decisions. No association. There is no association between SARE Ladies and a guest speaker or professional. By listening to the SARE Ladies podcast, you acknowledge and agree to this disclaimer and understand that the content provided is not intended to replace professional advice.
Now on to the show. Thank you for tuning in to the SARE Ladies podcast hosted by Anita Wong and Tiffany Lee.
If you enjoyed our show, please leave us a review or follow SARE Ladies on Spotify and Instagram. And also click on our show notes to subscribe to our newsletters to stay on top of our news and upcoming events. Until next time, Pod Squatters.